Ouch. The stock market made some key technical damage today. So, what exactly did Jerome Powell have to say, and why does this matter? Well, the last time we saw this pattern play out, it was a 10% drop. A 10% drop would get us back down to our previous all time high. So, this could definitely happen. And Jerome wasn't even really that angry today, but his comments did move the market. So, please make sure you stay tuned because I'm going to show you exactly why it matters. The Dow Jones on the left hand side is already quite weak. Lots of weakness by looking at both of these patterns. We got a head and shoulders, but notably, the power slam onto the 50 is where it looks like we are right now. So what we could be doing next is a dead cat bounce back up to the 50 and then a reject. That would take us back up to roughly 510, and then we'd be looking for the sell-off to where? Well, I'm looking for 480. If this pattern continues to play out and we fail to not just fill this gap and we don't bounce, meaning the 497 back test for a gap fill means that we just go lower. Man, stock market crashes here. Last piece would be seeing volume come in. So what does this really mean? It means the market went from being extremely greedy to neutral to fear, and we're getting closer to extreme fear. So what exactly did Jerome say? That's probably what you're wondering because it's what I said in the video. Well, risk-addicted Wall Street funds are shaken as bad news piles up. So what did Jerome have to say today? It is appropriate to let policy take further time to work. Crap, higher for longer. I think it really means stronger for longer. So the 2-year note actually spiked over 5% today. And that's because Powell signaled higher rates for longer amid persistent inflation. All right, so is the stock market crash going to happen? Because it looks like a rug pull would be coming next. Yes, Powell signals delay in rate cuts due to persistent inflation. Make sure you watch until the end because I'm going to let you know everything you need to know as it relates to this. So is Jerome Powell giving us the thumbs up for a stock market crash? Well, yeah, the rug pull appears like it's going to be here. And I say that because we just broke our monthly pattern, which was actually giving us really bullish clues. But now that we've made that lower low, what it tells us here is that we have to wait for the close of the candle. Otherwise, my bullish assumptions are wrong. We could be going down from here. So Jerome had the chance to save us today, and it looks like he is choosing maximum optionality because the U.S. economy over the past year has been quite strong. And that is true. This is a U.S. story. Not only is the economy strong, but the dollar is strong. Jobs are strong. So dollar heads for best run in a year as Fed seen delaying cuts. All right, what does this mean? It basically means that, where are we here? I had a highlighted quote and probably on the next article. So I'm just going to push forward here. So why the dollar is causing chaos in emerging markets? It's pretty simple. What's behind the dollar rally this year? U.S. exceptionalism. We just talked about that. Exceptionalism in bonds, exceptionalism in the dollar, exceptionalism in jobs. But it's not the same around the world. So Jerome Powell was speaking with Tiff McClam, who's the Bank of Canada governor, basically Jerome's job up in Canada. And what has Tiff been saying? We're seeing what we need to see. We just need to see it for longer. All right, cool. Well, I think he's pretty much going to be cutting in June. Why? Let's look here to the Canadian data. Core CPI is already at 2%. That's the Fed's target. This more recent data is a little bit hotter, but remember, the Fed cares about core. I couldn't find core PCE for Canada. So if you found it, please make sure to let me know. I'm going to play you a very short clip here from Christine Lagarde, who is the ECB president as well. So just hang around. I'll get this back to you in 1 minute here. I got to share the tab. Let me go here. There we go. We got Christine Lagarde. Let's listen.
Impact.
So the market is thinking that you're going to cut rates in June. You've signaled June. Is that still the plan?
You know, we are observing a disinflationary process that is moving according to our expectations. And as I
So basically, yes, if we continue to see what we've already seen, we're likely going to be cutting. June could be live. I don't know if they're going to cut in June, but what this really means is that Jerome is giving himself maximum optionality. If the ECB goes first or second, and Canada does the same thing, well, Jerome would be later coming to the party. And that'll be very important because his primary thing he said today was that 12-month core PCE inflation was little changed when we look to the estimates. There's a few things here, 12-month core PCE. But just before we go further, I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up and subscribing to the channel. I would greatly appreciate that. Thank you ahead of time. So what makes the US exceptional? Well, again, let's listen to Jerome because he told us 12-month core PCE inflation was little changed in March, according to estimates. So what this basically means is this chart right here. It's the US core PCE year over year, or the 12-month chart. And what it shows us is that, man, the drop happened fast, and now it's stalling out. In the last 3 candles, it's kind of hovering here at 2.9. The interesting part about this is that we already know that the Fed wants to cut. They've talked about balance sheet runoff. But what Jerome's really doing is giving himself some maximum optionality. So if Christine Lagarde goes first in June, and so does the Bank of Canada, or shortly after, what this basically means is that Jerome's going to get a couple more lines. A couple more lines means that he's going to have more evidence, which is the same thing everyone keeps saying. We're seeing what we want to see. We just need to see it for longer. And Jerome is also aware of what the formula is. We've talked about this. Sufficiently restrictive or too restrictive. There's a really big difference because what we do is take core PCE, which is currently at 2.8. I'm gonna bug you with a little bit of math right now, but I did it for you. So just hang around. We're currently at 2.8. All right, cool. So that's the current core PCE. The Fed's fund rate is at 5.33. I can show that to you here in a second as well. So if we go to the Fed funds, it's currently at 5.33. All right, so we got the 2 numbers now. What does that mean? It means we just go core PCE plus 1.6. So that would be 4.4. What does this mean? We're too restrictive by about 1%. Jerome Powell could cut basically 4 times, 4 times, and they're still restrictive here. I think the concern, as we noted in Canada today, if I can find the tab I was just looking at, the investing.com one, I'll just pull it up again. What this basically means is that Canada is starting to see a reacceleration in inflation as well. We're currently at 2, but month over month, man, 0.5, 0.6, those are hot readings. But they're basically going to have to cut. Our economy is not the same as the US. We kind of suck. And so does Europe. It kind of sucks over there. So shifting gears to the Fed, as of right now, the July cut is currently at 38%. So the odds are not going to do anything. It would now be a surprise if that happened. So what I want to do is really show you a couple more charts because what's so important for me is that I haven't just heard warnings. I'm getting confirmation, which is my 4-step recipe. And as I zoom out to higher time frame charts, I'm like, all right, well, how can we spin this bullish? And it's not that we want to spin it bullish. It's like, well, what are the bulls going to see? What are the bears going to see? Here's what I see as a bull. And I'll tell you what as I see as a bear on both charts right now. So we look here to the S&P. The first thing I would note is that we're right here on support. That should be bullish. We should find buyers. And I think we did. I was away for most of today. So what happened? Yeah, tap it 1, 2, 3 times. So people did step in and buy it. But was it enough? Man, I don't know. Looks pretty soft to me. There's not really volume to support the move lower, but volume is not necessary for a sell-off. We just need people to agree the price should go down. So if we crack this area, man, that looks bearish. We're probably looking for 460 or back down to minimum 480 or that previous all-time high. Let me make sure I get my lines back here. There we go. What's bearish? Well, we got here's what's bearish on here. We got 1 lower high, 2 lower high, 3 lower high. Then we got 1 lower low, 2 lower low, 3 lower low. That's a pattern. Ladies and gentlemen, that's a pattern. If we continue to close below previous candle lows, currently at 509. And again, I got the cheat codes for you. So stay tuned till the end because I did it for you already. I got the notes. The links are in the description if you want to follow along as well. So we're currently below 509. We currently have 2 daily closes below the 50 DMA. These charts are breaking. They're not broken, but they're definitely breaking. The weekly chart, yep, it's breaking. This Friday, it's going to be broken. And as we look here to this candle, we're currently below the low. There's not a lot of ways to spin this bullish. So do I have my tweet up? No, I don't. So what this basically means is that as of right now, the pattern we were looking at, or SPX, it has it on here. I was not expecting a lower low. I was expecting only higher lows, which means, hey, I'm at least partially wrong. We're going to have to wait until the close of the month to see if we actually save it or not. But this is weak. Same thing here for the NASDAQ. So as we look here, all right, great. So you're getting really bearish now. Tell me what the bullish story is. I'll tell you right now. If we go here to UNH actually did pretty good on earnings. This is one of the biggest stocks in the market. So it's currently up by 5.2% today. And if we look over to United Airlines, again, very early into the earnings season, but stock is up by 6% in after hours right now. So what does this mean? It means the potential for large caps to start to have the earnings push further, meaning we're going to see the earnings broaden out. And this is going to be notably important because a couple of large caps that report first, we talked about Netflix on the weekend. Now we're going to talk about Tesla. Tesla here is looking kind of crap. And I say this because we're looking for a miss. 41 cents over 49. The stock just cannot catch a break either. The stock has been going straight down. What does that mean? Man, Tesla's still a big company. It could still hurt the S&P 500. Even though all it's done is go straight down, they've laid off 10% of their employees. They have 2 senior vice presidents leaving. They're cutting their FSD by half. And they're not really a $1 trillion company at all. Not even a Mag 7. They dip below 500 billion and below to stock bulls. Man, the market looks like it's really getting soft. So that's it for today's video. If you want to hang out with me, you can, if you want to watch more content, you can do that on the left-hand side by watching the weekend review. And if not, maybe you want to subscribe to the channel and hang out with me tomorrow live at 9:15 a.m. Thank you so much. I'll see you tomorrow.